Hi, everyone. Welcome back to another VC Deck Breakdown presented by Cremorne Digital Hub. I'm Darren, the Partnerships and Community Coordinator here at Cremorne Digital Hub. The VC Deck Breakdown is part of our Lunch and Learn series where we give founders the knowledge that they need to scale faster. Now, I know that oftentimes it can be pretty daunting to put your deck in front of a VC. You work for weeks on it, and then the VC sort of makes a judgment in 3 minutes or 30 minutes, something along those
Depends on
lines.
how long the deck is, I guess.
Yeah. But today we're really lucky to have Hugh once again to come in to give us an unfiltered opinion of the VC and how they might look at that deck, give you some tips on the industry, some broader comments about decks and how you might best approach doing that. Really glad once again to be back again.
Pleasure. Thank you for the
Hugh
invitation,
from
as
Galileo
always.
Ventures.
Hello, everyone. So while Darren gets all of the things up, maybe. So the quick intro to this, as Darren said, is really the idea here is to try and give a bit of a kind of brain dump. Sort of trying to literally speak as I think, talking through, I guess, what goes through our mind when we read these things. We obviously read a lot of them. There's this sort of asymmetry, I think, sometimes where founders forget that. We see a million decks all the time and come with our own biases, and every VC is unique in those biases. Those who've come to a few of these will hear some of my repeating patterns, but net, thank you to the founders who submitted their decks. I haven't seen them. Darren hasn't showed them to me yet.
Yeah.
So I'll be totally fresh.
Great.
My caveat on all this is, I don't profess to be right. Only profess to give an opinion.
Sure. Yeah, absolutely. You can only do that. So if you do have questions, please drop them in the chat and we will endeavor to answer all of them later on. But without further ado, I'll open up the decks now and get us started.
Easy. And a little bit about Galileo. I forgot to actually do that part. We're an early stage venture fund, so we do pre-seed checks between 250 and 750K. Generally speaking, we lead rounds. We're now into our second fund. So we just closed our first check out of the second fund, which is very exciting. Fund one investments, some of the leaders that you may know are Andromeda Robotics here in Melbourne, Tixel here in Melbourne. We've got Relevance AI up in Sydney. And then we have a whole sort of range of other ones that you may are perhaps a bit more niche, but they're the ones that you might recognize out of the first fund. So the second fund is coming along quite well. Here we go, getting the... I see we've gotten an advanced setup here.
Oh, wow. I'll scroll.
Okay, you can scroll, and
I'll
I can
scroll
look.
for you. I'll scroll for you. Yeah.
It's nothing like every software company always has the problem of the software never works.
Yeah.
Okay.
Great.
Slide one.
We have X currency.
Okay, I need you to move your laptop over a little bit. My eyesight isn't that good, Darren.
Yeah.
Okay, so hard money for a digital world. Oh, cryptocurrency, I'm guessing. Now, it's engineered on Solana, so, okay, we're at least looking at the more modern parts of cryptocurrency. This sort of makes you go, So we're kind of, there's a lot of different views in venture about like whether we're sort of in crypto winter or we're in crypto nuclear winter or we're in crypto spring. I think it's an agreement we're not in crypto summer. I think that's clear to most people. It's been this sort of interesting thing, I think, of where everyone's kind of gone full cycle of thinking it's really exciting and then sort of having kind of the excitement burst, I guess, so to say. And now we're all excited about AI.
Yeah.
I can't wait to hear what the AI is in this particular pitch about a gold-backed currency.
Yeah.
Now, sort of looking at this, I guess, from the start of it, there's been a lot of sort of resource or commodity-backed currency plays recently, both on the sovereign side and the non-sovereign side. Curious to see what the message and play is here. There's obviously a number of different American things, and I think kind of these things always have the challenge, I think, at this point of where you have this problem of, well, okay, why wouldn't I just buy a gold ETF? Like why wouldn't I just do that? And so I'm curious to see what their response is. So Perth, interesting. Get an Australian flavour to these things.
Yep.
But let's see. Okay, so interestingly, starting with the actual investment piece. So this is, usually it's like problem solutions first, but, I don't mind this.
Yeah.
Again, it helps me sort of work out that piece of, is it really like in scope for us or is it not in scope for us? So 550K capital raise. Okay, cool. That's, within our typical check size. So, sure. That's sort of, as I sort of have said before, sometimes you get to a deck and you get to the end and they're saying like, oh, we're raising 20 million. And you're like, oh, okay, this is not really my stage of investment. So interestingly, and this, drawing on some of the olden days, is really, I think, the question of, is this like, if I read the thing here, direct token purchase or convertible note. Okay, so you're doing a sort of token offering, a tokenized piece, and what that looks like. This is kind of one of those weird and interesting ones where you sort of go, well, why now? Like, what's the benefit of buying now compared to otherwise? And I think that's going to be one of the challenges here. If half of the actual raise is going towards the reserve purchase, at what point am I buying just buying gold, buying half a brick of gold?
Yeah.
And so that's an interesting question. I mean, yes, you've got some underlying collateral and there's some security there, but I think for me as a VC with this sort of thing, I go, well, the challenge, I think, of where you're putting a lot of the capital you're raising into like a hard asset like that, whether it's gold or whatever, capex heavy businesses aren't scary necessarily, but buying materials can be scary with your venture investment.
Yeah.
Because yes, it's secured, but then also like a secured asset isn't actually the asset class that we work in.
Yeah. Yeah.
And again, it's that sort of high risk, high return asset class for us. And so we've got to make sure that there's that right sort of risk balance and return balance, which typically speaking, like same as things like credit funds and things like that, like it's not where we invest. Not saying it's bad investment.
Sure.
Okay. Executive investment summary. Ooh, see, the minute I read that title, I go, this looks like it's been AI generated. It's the minute that you read executive investment, it feels that way. Okay, so problem solution. Here we go. So I'm going to okay. So crypto markets unbanked. Yes. Okay. Yeah. Okay. Okay. So we're talking about the piece of general currency problems in the crypto market. Yeah. Okay. The market sizing piece. This is a challenging one because I think it's sort of like you sort of talk about the global crypto market. And you sort of go, this isn't really the global crypto market. It's a bit like, again, I don't really quite see the piece of what that looks like. And this feels a little bit to me like, even when I look at the upside piece of saying, we're entering 50 cents a token, we're going to have a stage pre-sale up to $1. Like it feels like we're back in 2018, 2019, 2020 a little bit.
Yeah.
And so we'll see where things are. Traction, interesting. Smart contracts complete, cool. I mean, I imagine that's probably not a huge. There's still problems to be solved, but not a huge issue. Debt free, cool. I wouldn't be surprised if you had a whole lot of debt in there right now. I think interesting, and like the Perth Mint piece. Okay, cool. You've got a good bit of demonstrative piece of that, and I think we spoke. We spoke at Deck Review, or was it the other presentation here about the guiding SMSF custodial proof?
Something along those lines.
Yes, correct, for cryptocurrency. So definitely understand that sort of world space.
It's definitely not the first crypto deck that we've looked at.
No, definitely not the first crypto. I mean, like it's hard to avoid a crypto deck, a bit like hard to avoid an AI deck.
Yeah.
So I think, again, when I look at this from the VC lens, I go, well, this isn't really, this doesn't feel like it's the right target for my fund mandate. Different perhaps as an angel or as a crypto investor, or even if I had a crypto fund.
Sure.
But for me as a VC already, I'm sort of like, okay, so let's keep going and let's see what else we find.
Do you think it does drastically, does your first opinion of it drastically differ based on if it fits your mandate or not?
Well, I mean, I think a lot of it is, I think for us, like we want to be able to work out, is this within our investment horizon and universe or not? And our universe is pretty broad, to be fair.
Yeah.
Exception, investments do occur. Like as much as I say, oh yeah, $10 million raise, like I would never do that. Well, if you got $10 million into Anthropic early enough, you'd go, well, okay, this is $10 million at $1 billion valuation, but it's probably got a way to run, right? So exceptions do occur, and I think it's you want to be able to firstly get the founder a quick answer. But then I think secondly, you want to be able to, because you see a lot of volume, you want to be able to sort of quickly filter. And so it's often easy to filter out the ones that are pretty clearly outside of mandate. So the ones that are in the middle that are perhaps a bit trickier.
Okay.
And like I said, this sort of fits our mandate from the fund sizing, from the raise sizing piece. But I think on the strategy of what our fund is trying to achieve and that risk reward ratio for the fund itself doesn't feel so far like it fits. Like I think again, like I look at this again and I go, it's like this feels very financial producty.
Yeah.
And that's not typically the sort of thing that we'll invest in. Not that doesn't mean we never will, but it's not typically the kind of thing that we invest in.
Yeah. Would you know other investors that would be much more interested?
It's a good question. I actually don't know. I think for us as venture investors, our investors obviously will have a spread of their own assets, but we don't really have a lot of insight into that.
Yeah. Okay.
And like I could kind of maybe dig through my mind and think, who's sort of is crypto keen versus crypto naive,
Sure.
or crypto scared, or crypto skeptic. But in terms of like, who do I think will have allocation for, crypto native gold? I wouldn't, no one immediately comes to, you don't have an immediate yes or an immediate no, because it sort of is that question of what's their broader asset allocation look like, and then how do we fit in, how would this fit in within that? And I'm actually curious to see if the founder unpacks that in this deck, because I think that's kind of the question for this market is really like, and maybe this is so market opportunity, okay, cool, gold-backed security, but like I think the question I have here is like, what's the role this has? Like, is this about saying we want to be able to generate like a superannuation style portfolio capacity within the crypto market, in which case we need to have defensive asset classes like gold, silver, we need to have credit assets, or, assets backed by credit securities, whatever that might be, like, so that you can build that sort of superannuation style portfolio approach? Or like, what is its actual role? Because I think otherwise it sort of gets a bit lost in just like that asset universe.
Sure.
So business model. Okay, so spread, sure. Gold backing, sure. Like I think, these things, this all makes sense. Again, it's the same thing you'd sort of, I guess, sell in terms of like what you would really do, probably, borrowing the sort of the cryptocurrency pieces in terms of transaction cost and things like that. Like it's the same business model as in a gold ETF. You're buying and selling on spread. You're hoping that gold goes up. And so I think that's, fair. Sure. So a nice simple business model. Sure. Okay, competitive advantage. Now this is the interesting part is that and maybe this is where I don't want to see if the founder's actually here, but I'm interested in how, like, I haven't quite really understood, I guess, so far in this what this incremental piece is meant to really mean. Like that part hasn't really come through to me about how you're seeing the incrementalness and how that fits into that broader business model. Because this, to me, feels a lot like that third column of the gold-backed stablecoin, effectively, of just like it's a gold ETF kind of thing. And perhaps I'm oversimplifying these things, quite possible. But, like where does that kind of exposure end up sitting is, I think, a little bit less clear to me. And I think in the same light, like some of the competitive advantage here, I sort of go, well, like there should, I think, from my view at least, be a column here of like gold ETF.
Yeah.
Like, what's your advantage over the investor buying a gold ETF? And that might just be to say, well, we can buy it, with crypto. Great, cool. That's where we then become that question of how we do the asset allocation piece. But, like that is, otherwise I'm just sort of going, well, there's already existing processes in place to be able to do gold. And I'm sure there'll be leveraged gold. There's obviously gold commodities, there's gold supply chain stuff, there's gold mining, refining, like exploration. There's so many different options for a public market investor to already be able to have exposure to gold. That, what does that actually mean? Or, I can buy a brick and put it under my bed. Well, you see those lines of people. They're the lines of people, I think to sort of look at the broader market piece here. There's outside ABC Bullion, which is on in Martin Place in Sydney. You always have there's like in the last probably 6 months, there's now like a line of people out the front and like a little security band, and like I always think to myself like, wow, we've gotten to the stage of like the market cycle where there's like a line of people outside to buy like like little the little bricks of gold or whatever. It's very strange. Never seen that in my whole life. Okay, so let's look at the financial predictions. Okay, return scenarios. So this is an interesting question, right? And this is where like what's our time horizon here? Okay, so 12, 18 months. 12, 18. So pre-sale is the first column, middle column is 12, 18 months, and the right-hand column is 36. So it's interesting because 3 years of 5x investment, you go, oh, it's a really good investment. Yeah. For us, we go 3 years of 5x investment, is it on its path to 1,000?
Ooh.
Right, and that's where again this sort of risk return piece comes into a different play, I think, compared to what you typically think for a public market or like a typical investor. Because like there is an argument to say that in our portfolio, and we debate this internally sometimes, of saying, do we actually do some of these things have a different sort of spot on that risk reward curve in saying, oh, we might be able to get some liquidity in 3 or 4 years, it might sell for 5 to 10x, 3 to 10x, whatever. But, then we can obviously put some runs on the board for our investors. We can show them that. But, the other argument of that is to say, well, we've got a limited number of checks we can write.
Right.
And the role that our investors have like asked us to, our mandate is buy, hold for 10 years and generate the 1,000x return.
Right.
Not saying that we wouldn't complain about a, earlier exit that's a good exit.
Sure.
But, you sort of want that to be the sort of the backup case, so to say, than necessarily the planned case.
Yeah, you only have like a limited amount of funds to distribute, right?
Correct. So, and, like there's only so many hits that you can really take with the fund size that you have. So I think that's where I look at this and I go, again, like, it's not saying it's a bad investment, but like it probably doesn't necessarily fit our broader strategic piece. And I still don't really know if we can, it still is an uncertain question as to whether funds like us can hold tokens or not. I think we never really resolved that.
Yeah.
Got a bit of a debate for a while within the market. And then I think now that crypto kind of cooled off, everyone stopped arguing with the regulator about it.
Yeah.
So I actually don't know the answer to that.
3-stage growth roadmap.
Okay, so we're going to like a peer-to-peer payment piece. Okay, like I can kind of, the first two kind of make sense in the sense of, okay, we're going to do like the gold piece, then we're going to do like an international exchange piece, and we're going to be able to actually keep issuing and buying. The peer-to-peer payments. So let me have a look at this, like a digital wallet. Like that's kind of what every cryptocurrency company kind of promises, and I wonder how much that piece, the sort of the underlying asset-backed piece, makes a difference there.
Sure.
There's sort of is an overlay here of like, is this kind of the real sovereign currency of the future piece that I think is an interesting question to unpack, but hasn't really, like, the narrative of that hasn't really come through to me of saying like, this is kind of what you would do if you were building a sovereign currency backed by a security, which not all current sovereign currencies, well, like most sovereign currencies aren't fully backed by securities anymore. But like, there's not really that message hasn't really come through for me. So I think that's kind of one of those things of, I don't know if that is intentional or not.
Yeah.
But there's that interesting question of what that finance looks like. Management team, let's have a look. Pictures, give us pictures of you. This is where it definitely looks like it's AI driven. Like it's just got the little letter things. Okay, so like I think in this kind of one, so good to see that Costa obviously has the financial piece. Interestingly, it's kind of that interesting, like founder director, is that CEO as well? Like sort of you got a CFO and a CTO there. And I go, like, what are we actually, kind of doing here?
Yeah, I would think so, right?
I would think so. I assume so, reading between between the lines here. And I think here, like, give me a little bit of color, a little bit about like how you know each other. What does that look like? Where are you located? Even cryptocurrency teams have a habit of being fully remote, which is a good thing and a bad thing. Sure. But can obviously comes with its advantages and disadvantages. But definitely, let's give me some pictures of you. Like.
Yeah, 100%. Yeah.
Maybe that's because I'm sick of reading all of these text heavy documents.
Yeah. Okay, cool.
Okay, and then this is where we got USD here as well. So we didn't actually have USD, I think, at the start. It's the other piece.
Yeah.
And so it's always a tricky question as to whether or not, I assume this is an Australian founder.
Yes.
But don't forget that when you send a deck, you want to be clear about that one, even just in a footnote or something. But I like the structure of this in that it's showing the milestones unlocked with this round. I like that. That's a really good way to put it, of saying like, this is what you're kind of getting, or what we're getting for the money. So, and we saw earlier in that second slide, we saw their sort of pie chart allocation of where they thought they were going to spend the money, which is also something you want to be better put in there. And, next steps, good, contact details there. Great. Nice, simple, I think it sounds, like it sounds good and reasonable. Again, it's not a space that I know really intimately that well.
Yeah.
And I think that makes it harder to really be able to give a lot of feedback. But actually, I think the narrative is pretty good, barring that piece of really like unpack that sort of sovereign piece for me and that capacity and the difference between an ETF and otherwise. But like otherwise, I think that the deck is structured quite well and it's got good information.
Okay. We'll break quickly for some quick questions. I believe Costa is with us in the room. So if you would like to drop some questions that you might have below, we'll endeavor to answer some of them. But while we're waiting, let's see here. In a typical fund, I read that VCs expect a 50-60% of startups in that fund to fail, 0 return, maybe 10% to generate the profit, i.e. 10x return. So in a $30 million fund, what level of returns are you targeting overall to be successful? Is it 2x fund, 60 million?
Great question. If you find the 2x fund, look, it's tricky because the typical VC fund returns almost nothing, full stop, over the entire fund. So the ones that do really well do really, really, really well. And I think that's where it's one of those weird asset classes in that, much like the startups, the funds themselves similarly either perform exceedingly well or very, very badly.
Yeah.
But yes, no, you're absolutely right in saying that even I'd say greater than 50 or 60%, we expect to return nothing. So a zero for us is actually in some ways better than a slow, painful, death that requires multiple bridge rounds and everything else. And there's a whole question as a VC of like, how much do you sort of back the winners, and like do you pro rata and your follow on versus kind of let things flow, knowing that you often don't. It's hard to know sometimes if it's going to be a winner or not. But yeah, no, you not expect, say, out of a fund of 20 investments or 25 investments, you'd expect 1 to 3 to return all of the money. And those 1 to 3, like if you think about it, I'd love to return 10x my fund, So
sure, of course.
Those 1 to 3,
Wouldn't we all?
Yeah, exactly. But if you think about it, if it's a $30 million fund and I want to be able to return 10x, I want to be able to have, one or two, let's say one of the companies return 200 million. That means it's probably going to exit for $1 billion.
Yeah, awesome.
And I've got to follow it all the way through and things like that. But like that's the math we have to think about.
Didn't get any questions from Costa. All good. Would be interested to know which of these slides are more or less relevant for a patient capital hardware focused pitch.
Yep.
Would you still expect to see the same return scenario slide, for example, in the first pitch with a 7 to 10 year exit compared to a 12-month crypto timeframe?
Yeah. So what I always say to founders is like the horizons I like to think about is like, what do things look like in the next kind of 12 to 18 months? And like, what does that sort of look like in the sort of the current round through to the next round?
Yeah.
And then what's that vision in 10 years? The space in between is always really unknown. So like our first investment in fund 2, for example, was a brain computer interface, right? So like hardware, patient capital, like this is hard med tech, implantable, device kind of world. And so definitely not afraid of it. So I don't think you necessarily need to do that because the sort of the return projection side, because sometimes it's like, if I look at brain computer interfaces, for example, that kind of, you look at how we took it to investment committee and we sort of said, oh, look, within market A, market B, it'll do well, like if it works, that's great. But I was like, the net of this though is like, given this is a minimally invasive brain computer interface, if the team succeeds in being able to build a minimally invasive way to be able to do a brain computer interface, you sell it to consumer and you go, there's no question if in 10 years plus, this is going to be huge.
Yeah, 100%. Yeah.
Cool. It's like you almost don't really need to try and do the math on that. Right. You're like, look, like, if the science works, it's going to be fucking huge.
Yeah.
And so like, I think it depends a little bit on what the market dynamics of that look like. In fund 1, we had Kite Magnetics, for example, which is doing aircraft now automotive as well, material science, deep tech thing. And that's a little bit different, right? Because you want to be able to understand the dynamics of what is the automotive market compared to the aviation market? What does it mean? If you're going to put this material into electric engines, what does that actually mean? And what does the return profile look like? And so that's a different kind of market in that you have less of that piece of I can just guess.
Yeah, this is a hilarious comment. Oh, good. There's some chatter. Into the in the chat about
Oh yes, I mean yes, correct. You look at some of this and like I wrote a letter. We no longer do newsletters at Galileo. We're writing a letter, and Masa-san's the Golden Goose slides, fantastic.
Yeah.
So you got to say it's one of those strange pieces of where certain investors, you think to yourself, they're absolutely bonkers. And certainly they've had some, Masa-san was in Theranos and things like that. Like big in WeWork. How did that go for them? I think not necessarily great, but then the good ones offset all the bad ones. That's, the strange part of the asset class.
You almost have to be willing to make that sort of like 100 to 1 16 leg multi.
And the rolling joke, which James hates when I refer to this joke, but the rolling joke in venture is that everyone who invests before the stage that you invest in are all degenerate gamblers. To quote the commentator here, everyone who invests before you are degenerate gamblers, and everyone who invests after you are investing in sure things.
Right.
So there's obviously over time you get more knowledge and data and proof points and everything else.
Yeah.
But then obviously so does valuation go up. So like that's the balance.
So just last question before we go back to the next deck. What's your average horizon from introduction to investment? One assumes the pitch is just a can opener. The follow-on discussion is a glimpse of opportunity there. In terms of diligence, etc., how fast can things move with your fund? What's the average?
Oh, it's a good question. So it varies a lot on how quickly the round is moving, the deal structure of the round. So, for example, safes will move faster than price rounds. Price rounds, because you have to get everyone all together all at once, closes all at once. Safes can move faster. Typically, as a fund, you'll always be last check-in anyway. So even in a safe, even if you're doing a safe round, so to say, while in theory you could sort of close the safes over time as you would with an angel, typically for a fund you'll say, okay, well, we're in for $500,000. We've got to be the last check in the safe. Yeah. So we'll be the last to sign the safes. So if we want you to get $1 million total, or you've said to me you're going to get $1 million total, we need to have all the other 500K signed before we'll sign and transfer the 500K in a safe, even though in theory you could transfer the safe early. So it's a bit weird in the structuring piece.
Yeah.
In terms of what it actually has looked like, we've done deals in 3 weeks. We've done deals in 6 months. So it all depends a little bit on the staging of the company. We like to talk to people early, and we always say, every VC always says, talk to me early. Everyone. But sometimes a lot of the work, like if I think about some of the checks, some of the later checks in Fund 1, for example, a lot of the work was, if the company ultimately needs 750K, we might be in for 300. And then the question is, well, how do we find the right co-investors? What does that look like? Sometimes you've got to sort of negotiate a little bit, do some planning with the co-investors, work out how you're going to support the investment with the co-investors, structure the round together. What are the terms? What do we, the more investors you have, the more people will be back and forth on bits and pieces of the shareholder agreement and all that kind of rubbish. And other times, I talked to a founder recently who is still negotiating, spinning out, his PhD material science thing of the university, and they've got to work out their IP licensing before he goes a lot further. Wow. And that might take weeks, that might take months,
all things with unis.
So, it really depends a little bit on that. But funds can move pretty quickly when we need to. Assuming that we have capital available to actually invest. So things can move really quickly, but sort of typically, it depends on who the leads are and how big the round is and how many different checks there are in there.
True.
The VC facilitate angels to co-invest. Yes, we absolutely do. We happily introduce, I think it's the founder's job to manage those relationships and build those relationships and everything else. But certainly we'll always, when we've decided we're going to invest and we're a smaller check and a bigger round, we'll always be saying, hey, have you spoken to so-and-so? And we'll back channel to the other VCs or angels that we know and things like that and say, hey, you should think about this, or what do you think about this?
Yeah.
So definitely, yeah.
Cool. All right, let's head off to the second deck. Great. So next we have Complete Coach.
Okay.
There we go.
Complete Coach. I mean, I like the styling of this. Now, what I don't like about this, and Darren will know my favorite comment here, is this doesn't say what it does.
Yeah.
Right?
Yeah.
And I want the little, I want the byline, the little 2 sentences at the bottom. That's the sort of Complete Coach is a, or, building a, or whatever it is. Now I see at the bottom it says complete coach.fit. Now this says to me it's a fitness app. Now, every VC has burned their fingers with a fitness app. And I burned my fingers with a fitness app in Fund 1.
Yeah.
And I remember going to investment committee, and
really
I remember the older, wiser person on the investment committee saying, don't do a fitness app. These things are terrible. Everyone has lost money on a fitness app, and us saying, this one's different.
Yeah.
And of course you think that the one you're doing is different, because that's why you're thinking to yourself, this one's going to win.
Yeah,
every now and then, one does win.
It does.
My fitness code, oh, look, there's 3 or 4 that done really well.
Yeah.
But most lose.
Yeah.
And so immediately I go, oh, this is going to be an uphill battle. But let's see. Let's dig in.
Yeah. We actually do have the founder Sammy in the other room.
Okay, great, excellent, even better.
Great. Yeah, excellent. So,
okay, the market. I agree with the first part of this problem statement. We can agree with that piece.
100%.
That definitely is full of things that are doing it now. So this is where the online fitness coaching piece is an interesting question, right? Because I have some friends who actually are the subscribers to the online fitness coaching world, of varying levels of kind of buy the program, just get the generic program versus get the sort of more PT style coaching.
Yeah.
And so I know a little bit about the market. And I think it's an interesting space, and there are tools in this world, quite a lot of tools, sort of those marketplacey kind of tools increasingly, as well as the ones that sort of do the white label type solution.
Sure.
And obviously, all of them, you're still competing with just someone using iMessage and a spreadsheet. So kind of see the problem in that space. But it's kind of it's a hard space to monetize. So curious to see what the solution looks like. We're going to hope the solution is the next slide.
Sure.
And more problems. See, now, do you really need 2 problem slides here, right? And it's an interesting insight, though. Like, I think coming back to the showing the insight part of it. So you look at this little AI presumably generated graphic on the cartoon. I mean, everything is AI generated. AI generated. Don't suggest that's a bad thing. But like, yes, like that's an interesting insight, right? Is the piece of like, how do you make sure visibility is maintained? And that's actually a really interesting insight of like, what does that look like? And I think actually I try and combine these slides a little bit better together of saying, okay, cool, fitness apps, bad, but also the key thing that coaches and clients care about is this visibility angle, and that then hopefully sort of sets you up for the next slide that hopefully is going to be the solution piece of saying we solve this visibility problem.
I think this was, with respect to the problem slide, I think in this slide the intention was probably to tell you why. Right. But
again, like fewer slides, better.
Right. Yeah.
Compress.
Yeah.
Okay. Solution. Now, like a product screenshot. Everyone loves a product screenshot. That says to me you've built something, at least in Figma or something like that. Back in the day, that used to say a lot. Now it says less because you could probably, Claude design your product screenshots.
Sure can,
So now it's interesting here in saying that we're complete coaching operating system. Now, I query whether how many of the competitors probably say exactly the same thing, right?
And now we come back to the same.
And now we come to the same, correct. And
comment we make every time.
Here we all go.
And if someone else can put their label on your thing, then what's different about your?
And so I can take your logo off and put someone else's on. Do you really have anything, truly unique? Now, there's this specifically online fitness coaches piece, and I don't really know how the market segments
they are so similar, right?
They are
like
quite
you're
similar.
Doing the same.
But you do have that visibility problem. There's that asynchronousness. That is different, I guess. Right. You do have an asynchronousness about it that is maybe different. And like, again, I think of some of my friends who they'll have an American coach but be in Australia. And there's obviously it's different to like going to the gym and you're doing a PT with a PT standing there telling you about things. So interesting, and complete coaching operating system again doesn't like. I'd be surprised. You would surprise me. Maybe is better to put it. You'd surprise me if no one else has built the end-to-end coaching system for online trade. You'd surprise me. Could be possible. But I'd be surprised. I would have thought that at the least they would probably at the premium or the more organized end, they would cobble together Go High Level and HubSpot or whatever it is, like the 4 or 5 different solutions, and they'd make something work. And at the small end, they would use Excel spreadsheets.
And now potentially just vibe coding your own trainer for yourself. Because like no one like. Rarely.
And that's an interesting question, actually, is really like the piece of, what is when we talk about the AI-powered check-in analysis, like really when we think about management and programming, how much of the role of this is in e-course style, you're just marketing and then it can AI generate everything that needs to happen off your sort of, like there's an interesting question here. This is and I'm going to slight, off path you give me here, of like interesting question of, for a space like this, like fitness coaching, each coach presumably has their own views of religion,
of course,
of the way that programming should happen. Like slow how you
reps,
do,
fast reps, how much nutrition.
There's some science to it as well, obviously, but like everyone's got their own sort of style of that thing. And so there probably actually is a product in there somewhere of like, how do we actually get that knowledge and that religion view out of the coach's head to avoid giving generic ChatGPT fitness advice.
Sure.
And give that view of religion of saying, okay, we're going to do progressive overload these weeks, I'm going to do this, and it's going to be a 6 weeks on, 2 weeks off, whatever it is that they're actually, their kind of thesis is, I guess, what they're trying to propose. How do we get that out and then be able to then sort of put it into a thing that's going to be able to then recommend it to a client? That's an interesting question. It's not really what the product's pitching, at least from what I can see from this slide, but it's an interesting question. And I'm curious as to what AI-powered check-in analysis is. I'm guessing that's just going to be a chatbot that responds and uses the data and context. And look, Whoop has that now, and a lot of the other sort of fitness trackery things have those sort of AI-driven things that obviously MCP into the data set of being able to say, oh, your heart rate's up, so, you need to be able to do X, Y, Z.
Sure.
Interesting, but, kind of interesting. And interesting as well the way that it talks here, very heavy here in the language of being very coach centric.
Yeah. Yeah.
And that's probably right in that if as a client, I imagine you choose the coach first,
Yeah.
not the platform.
I think so.
So
Yeah.
it makes sense to focus on the coach part because you'll use the platform the coach says we use this platform.
Yeah.
As a client, you won't necessarily usually go to the platform first.
Yeah. Yeah. Also, I think, like with respect to, I think it also makes a little bit more sense to go towards coaches who have a business and then supporting them rather than
it's very
going
hard to
straight
grow a
customer.
small business.
Yeah. Yeah.
Very hard, particularly if it's a freelancer who's just starting out. Very hard market to sell to.
Yeah.
Okay, let's AI check analysis.
It's just slightly. There we go.
Okay, so the theory of this is the piece of the check and analysis piece does the prioritization. That's another interesting insight, right?
Yeah.
Of like, as a coach, how do I work out who needs attention today? Right, and again, this is coming back to the piece of like, how do we better present the problem solution piece? It's like, draw out some of these pieces of these bits of insight, and like I can read between the lines of what the insight is in these things, but draw out some of those pieces for me so I can really understand like where it is that you've come to these product decisions. Because this is actually an interesting question of like, okay, cool, like the theory here is we can use this to be able to prioritize it for you. You know, like we can work out the people that are falling off the wagon, so to say, or who, have, done something or whatever it is, or injured themselves recently and need to have their, training schedule adjusted.
Yeah.
We can, out of your roster of 60 clients or whatever, we can obviously improve that substantially. I don't know. Yeah, okay, that makes good sense.
Yeah.
I can see the product value in that. So, okay, interesting. Not quite what I thought it was going to be, but again, interesting coach-focused piece that I probably hadn't really thought about.
Yeah, cool.
Okay, so now this to me immediately goes, you're only really saving 50%. Doesn't feel like enough.
Really?
Yeah. Right?
Yeah.
Doesn't feel like enough. Because that's only doubling your throughput. And like, you look at software engineering and people are sort of 3 to 5x throughput, and that's a base case, right?
Yeah. Like when you put it in
but then on the client side,
software,
if you go from 40 minutes a client down to 3 minutes a client, you go, oh, are they really spending 3 minutes a day? It's sort of like, and so there's tension in the model.
Don't show
exactly.
clients.
And there's tension. There's tension in models like this, right? Where it's sort of like, yes, you want the coach to be more efficient, but also the reason you're paying the coach is for the attention.
Yeah, it's true. It's so true. Yeah.
Like you're not necessarily, it's hard because you pay the coach, yes, because you want an output, but also you pay them because you want them to sit and think about you.
Yeah.
And so I can kind of see that there's a tension between this. And I get the piece of it, 60 clients, sure, there's enough, like there's 50% saving, still 50% saving.
Yeah.
But I sort of go, is that really enough? If we really hit everything we can do here.
Yeah. Like if you compare to, I guess, like the other kind of leverage that software can generate for other professionals.
Yeah.
It's comparatively just not enough. But I guess maybe when you appeal to just
the other thing I'll just say here is like 40 minutes per client, 60 clients. Okay, cool. If I'm one coach and I'm trying to do 2,400 hours a week in review. Now, look, I can do some math 24/7 and it's less than 2,400.
Okay, fair.
Right?
Yeah.
And that's probably true. And that just kind of comes back to that invisibility problem.
Sure.
I get that piece. And it's sort of like, the question of the value of your gym members is kind of the ones that don't actually come.
Yeah.
The best gym members
so
who
true.
just keep paying you, but never actually come to the gym.
That's how most gyms actually make a lot of money,
correct.
is that they gamble on you.
The same way you can't cancel without having to go to the gym and think yourself,
100%,
like you're there and you're a member for another 2 months. So like, again, it's that implicit piece of like, I can see the coach lens of some of this, but the other part of me goes, well, clearly the current activity is not 40 minutes a client each week.
Yeah.
So are we actually generating more or less work?
Interesting. Yeah. Okay,
target market.
Here we
So
go.
online fitness coaches. Now, what I want to understand here, so there's small teams. Okay, what I understand here is really the volume of these, which is what this hasn't really quite, like, I like the specificity of this. I like how specific it is, saying 15 to 80, so it's scale, but not to scale. They're charging premium rate. Like, I like how very specific you are in terms of that main market. and the secondary market. But what I don't know actually, just off the top of my head, is that piece of how big is this? Like, what is actually that volume of people? And maybe this is the next slide.
Yeah.
We love it when the next slide answers the question that I have. But like, I think incorporate some of that in saying, how big is this primary market? How big is this secondary market? But I really like it when founders come and they have a really specific initial ideal customer.
Yeah, it's great.
I think it really helps you being able to narrow down what the focus is on a product lens, on a marketing lens, everything else.
Yeah.
Now I get pricing. Okay, so pricing.
Here we go.
Pricing, cool. I'm like, cool, you're doing SaaS. Sweet. Obviously, right?
Yeah, 100%.
Now, the part that's missing here is you're presumably going to clip a ticket too. And that's where I would assume that most of these existing products charge a base SaaS plus a spread on the dollars you're actually transacting.
Yeah.
And so what does that actually look like? And that's what I'd also sort of wonder a little bit here in the business model piece, is saying, okay, you're going to do 79.99 doesn't quite feel right in terms of the price structure. It's not quite the right shape. You normally expect it to be like 50 and 100, or like 50 and 150, or 79 and 200. Like they feel very close in price to each other.
Right. And like, what's the danger of the price being too close?
Look, I mean, pricing is always wrong when you start, right?
Right.
So, to start with that, your pricing is always wrong at the start, and founders never charge enough, all that kind of stuff. But like, there's a lot of that price psychology that's a known thing.
Yeah, it's true that.
And so this to me sort of goes, oh, okay, you need to sort of try and, like, I would say to the founder, like, spend some time understanding a bit more about that, like SaaS pricing psychology and things, and the theory behind all of this, because it's pretty well trodden and well known. As to what these things look like. And again, like, I can see the math of saying year one, you think you do 350. Okay, well, like, what is that? 350 out of what? How big is the market? What does that look like? And I think the other part that I'm curious about from the previous slide as well is like, what's the geo side of this market?
Yeah.
Because yes, you can coach fitness online anywhere, but like, I presume most of this market is probably US.
Yeah, true. Also, what's interesting? Both these decks today, we have not seen a TAM slide.
No, that's true.
Which is
no
fascinating.
Yeah.
I don't think I've ever made it.
Oh, there was a bit of TAM in the previous one, but not really.
Yeah, slight. But let's go to financial projections. We're looking to raise
$1.5 million for 18 months from it. Now, interesting. So let's look at where we're breaking it down. So we like a pie chart breakdown, as we saw in the previous one as well. So the bottom shows us where we're getting to, like that as well. So public launch, due paying users, that's through 30K MRR, which is what? 360K ARR roughly. Now, in the world of AI, 360K in the first year, not bad, but you look at some of these AI-driven consumer-facing apps, and they're like, 300K MRR in 3 months.
It's crazy.
And you go, oh, it's pretty crazy. Different business model here, clearly.
Yeah.
So I think I look at this and I go, yeah, the buckets look about right. I wonder if product and engineering is possibly overbaked.
Yeah.
And it's quite rare to say that as a VC, to say, are you spending too much on product and engineering?
Yeah.
It almost feels strange and wrong.
Yeah.
But
I feel like actually...
But in the world of Claude Code and things...
Yeah.
It's quite a different proposition, which is a bit of a scare. I haven't really ever had this response to these things. And this business to me feels like it's not a technically challenging business. There are technical challenges in the business.
Sure.
But like, different to like a deep techie kind of thing, where you go, will the science work? Will the science not work? Like, you can build this SaaS with enough time and effort. You can build this SaaS.
The focus is probably more on like UX and UI.
UX, UI,
how's
and
it feel?
Marketing.
Yeah.
Right. And so I'm curious to see of that product engineering bucket, like how you break that down? How much of that is in, because I'm sure that particularly on the client side as well as the coach side, like that UX, UI, it's a consumer facing app, really.
Of course.
Right? So like that is going to be a very important part of it.
There's probably going to be some element to it where if the coach is using it, they probably want to have some version that the client probably also uses.
Correct. You think that the client will have some degree of little diary inputting
like
thing as well.
Yeah.
And some of those patterns, I imagine you're just copying the existing app that clients use, right?
Sure.
Like there'll be an existing app that they'll use, and you're just going to copy the same thing.
Yeah.
But I think there is this piece of where the hard part I imagine with this sort of market is like probably a lot of these kind of, let's call them sub 5-person freelancery businessy things. They want the custom software that works just so. And so you've got this challenging product problem of where you want to build for the early customer base, but you've got to have a bit of that sort of taste lens of working out which parts to listen to and which parts not to listen to, because you don't want to end up becoming just a custom software provider. So there's an interesting platform challenge, which again falls into that bucket. But that's why one of the things I go, is this really going to be enough? 18 months, 400K growth in sales, is that going to be enough? Or I'm not sure.
Yeah.
So that's one, again, it's pretty rare in an early stage deck to say pull back on engineering. But yeah, there you go. Our team.
Yeah.
So
with
Michael,
photos.
we like photos. We love photos. Okay, so Michael, technical background, co-founder CTO, and Sammy, MD, which presumably CEO, I guess, MD, CEO, same thing. So what's your so what I'm curious about here, and what doesn't come through out of this slide is the piece of, do either of you come from online coaching backgrounds? She's got direct coaching experience, but I understand the piece of like, how do you understand the market?
Yeah,
Right. So Michael, it sounds like, cool. Michael understands the technology side. Cool, sweet. Sammy, I want to understand the piece of like, how do you understand this online coaching market? Like, what is it that you're like, Jules and our team would say, what's the vein of gold?
Right.
But like, where are you tapped into that's helping you really understand what these people are and what they need?
Yeah.
And I think
to be more
that's
clear that
important
Sammy is an actual online coach.
Yeah, or like what her insight, how she has that insight. Because being a coach, cool, okay. Like I'd worry, I think, if this was a team that didn't have some fitness oriented person involved in it.
Yep.
But like, how do you know the insight into why are you the best team to this piece, which has been very specific through the deck of being online coaching? How have you come to it? What does that mean? And I would have guessed earlier in the slides that this would be because the Sammy equivalent, the online coach, the person would be, I am an online coach. I've got my 80 clients. You normally think you would expect that narrative.
Yeah, right. Yeah. And that would just give it's so much more credibility, right?
Yeah. And understand the piece of where you get those early customers from. Because if you're in the market, you generally know other people that are also working in the market.
Yeah, so true.
AI decision support layer. So this is what you could have put in the first thing, right? The AI decision support layer for serious online coaching businesses. Sweet. That's what I need on the first slide.
Yeah. That's what he likes. Yeah.
So I like that piece. That could have been on the first slide. And then into the final slide is going to be a contact slide.
Yeah.
Oh no, okay, we get appendixes. Okay, so we won't get through the appendix. How many?
Oh, this is
the last slide. It's only one slide. Okay.
Yeah, sure.
So appendix. So now the architecture piece here.
Interesting.
It's interesting to see this.
Yeah.
Because this is not a business that I would have thought.
No.
I'd need to worry about the architecture of the business.
Yeah.
I can understand from if you come from, if you want to be able to know that people have thought about it.
Right.
But I think those problems of the go-to-market or that UX UI layer or the competitive landscape, those things are things that I think are much more question uncertain challenges pieces for me.
Yeah.
What is our software architecture?
Right.
And so I think that's the other part I would say is, appendixes, put in whatever you like. But I think what's probably missing for me in this deck is where you are in that competitive landscape.
Yeah.
We haven't got a competitive landscape piece. I think that's going to be a really important part for those who don't know much about this market. Market sizing could be better explored in terms of what those numbers look like, where they sit geographically. And then, like I said, I see this kind of thing, and most consumer apps, to be fair, are typically the go-to-market apps. It's a piece of where your success or failure is usually not about can you build this.
Yeah.
It's more about can you actually get to the right people at scale.
Yeah. Exposure, marketing.
Correct.
Getting people to use it, just having
and that doesn't need to be.
Adopted.
You need to have all of these CAC, LTV ratio forecasts and blah blah blah. I don't know any of that kind of piece. I want more the piece of hey, we're a member of, or we've built this. The classic is we've built this community. And the community size is this. And it's a heavily engaged community and blah, blah. And it looks like this. And this is where where's the first 100 customers going to come from? That's more the color of what I'm talking about, necessarily we can, acquire email addresses for $1.50 on meta ads and all those numbers change over time as you scale. I really want to understand more about where you think those things are going to come from and how you can actually see that go to market is probably the more interesting part. So interesting deck. Again, I think, is it for us? Ooh, I don't know. Again, every VC, fitness apps.
But this one's different here.
No, this one is different. This one has AI. If only we had more AI. I think it's this, but this to me feels like the piece of where, and to kind of give it more color to it, like I think this feels like it's a classic Australian SaaS play, right? Marketplace adjacent, SaaS, sort of B2B. Like product is not technically nightmarish. There's complexity in some of the AI stuff and blah, blah, but like it's not like you don't have to solve a scaling problem that is an unsolved problem. It's then just kind of really that core piece. So like very typically Australian looking investment, which is a good thing when you talk to Australian investors. But for us as a fund, those things less sexy at the moment.
Right.
Doesn't feel as swinging for the fences.
Yeah.
For an angel and things like that,
sure.
They see that and they go, oh yeah, like you can see this being a good profitable business.
Yeah.
Right. You squint at this and you go 3 to 5 years, 10 years. Can I see this generating good profit, being a good business, supporting a good team? Yeah. I can squint at it and see that. And you're like, got to solve a few things along the way and that kind of stuff. But can I see this being a huge business? Ooh, tricky.
Yeah.
But I also don't really know what a huge business in the fitness world software-wise looks like these days.
Yeah, I have no idea. Like how big is, I don't know, MyFitnessPal or
they all got bought into, like they've all been acquired into the bigger fitness brands, right?
Have they?
Because MyFitnessPal got bought by Under Armour.
Really?
Did it? One of them did.
I'm not quite sure.
Again,
we would love to take any more questions. We have a few minutes left, so if you do have any questions, please feel free to drop them inside the chat.
Oh, okay, Rob. Benefits to the client. See, this is the interesting thing. I don't care about the benefits to the client.
Ooh,
right? Because I think the client. This kind of comes back to that question of religion, where I go, the client will just do what the coach says they should do. There's probably a good point of saying there should be some benefits to the client.
Sure.
But that to me is more. I would be presenting that as why the coach should buy.
Yeah.
Right.
Yeah.
Like retain coaches retain clients longer because of this invisibility thing.
Yeah.
Is to me the more important part than the client side, because the client side I'm kind of like, you just you do the thing, The problem is unless you're doing discovery, which is a different problem.
Yeah, I just got a coach recently who's in this neighborhood.
There you go. They say we use this app, and you go, sweet.
I just do what I'm told.
Yeah. Or they just say, here's your program. It's in a notes app.
Yeah,
and you're like,
cool.
Sweet,
man. Yeah, sick.
So good question about lower pricing and building your base. Look, pricing could be a signal on both directions. I think it's very easy to think that you can just lower price and therefore be able to do that, but that can also be a negative signal in showing that the product isn't capable enough.
Yeah.
The challenge I think is this looks like a very sophisticated product, and I think that means you should try and demand a premium price.
Yeah.
But I think there's a gating piece there of where you can still have an entry level plan and an expensive plan.
Yeah, especially since you're selling to coaches to help them essentially make more money.
Correct.
Right.
And it's a much easier sell.
100%.
That's where it's like it makes easy sense to say, we also take on the cheap plan, which is $50 a month, we take 5% of your card processing and essentially of your turnover, right? And 3% will go to Stripe, or 2.8% whatever will go to Stripe.
Yep.
And then you say you make 2% on that. And then on the middle plan you make 1%. So there's also, you can do that piece of, and it's common in a lot of those like e-course platforms and all that stuff.
Sure.
Co-founders being family members, look, ups and downs. I don't know, I could never run a business with my significant other. That's a personal relationship question.
Yeah.
But doesn't scare me necessarily. I think it can show. Better way to put it is, I think family member relationship says what you're getting into. I think the ideal is people that you've worked with before, people who you sort of know well, friends, family members, whatever, kind of sit second to that, and then people who you don't know at all probably sit third. So family members definitely better than we met for the first time last week.
Sure.
But I think not quite as strong as we've worked on this before. And that's where people love the co-founding team that's coming back for a second play. Or a third play.
Yeah.
They like that for that reason.
Yeah, like a proven professional dynamic.
Yeah.
Yeah.
Go see typical coach described. Yeah, okay, that I agree with that. Yeah, I think that's where you can unpack that problem solution. And again, I think if you're presenting this in a pitch presentation, you probably have a bit more of that sort of visibility.
Yeah.
Invested now. That's a good question actually. If a founder or a founding team has invested X amount of their own funds into a startup, how do VCs view this? Look,
interesting.
I think that most founders early on, what you're investing ultimately is time and effort.
Mm.
And in some ways, it worries me more the sort of person who's like, I've invested $500,000 of my mortgage into this business and we haven't launched yet. You go, ooh,
Mm.
I worry for you. I worry for your financial security.
Yeah.
It can obviously be a sign that the person's committed, which is
Sure.
great. But like, typically speaking, I would say early founding teams is like you're giving up your secure salary working for a big four bank, and you're putting a lot of time and effort into this. That's what you're really doing. And so whether or not you've invested as well personally, some people have the. I think it can be a different. Maybe it can be a little bit as well about a financial situation. Like if you found someone who was like a Mike Cannon Brooks, and they were like, "Oh look, I'm putting $0 of my own money into it," you sort of go, feels a bit strange,
Right.
right? But like, on the converse, a university student who's working at McDonald's in their spare time would expect them to, reverse mortgage a house. Well, they don't own a house because they don't own a house, right? Like they're a university student, and anyone who's under the age of 25 doesn't own a house these days, right? So like, it's a little bit context specific, but definitely not something that we would require. And I think can sometimes be a negative signal at times.
How is competition viewed in the market? We know all we're looking for the idea with free runway, but competition in the market also means the market exists. I heavily agree with this.
Correct.
Most of the time, I think if you're the only one in a market,
there are rarely any new markets.
Depends on the idea. Oh, actually, I just heard of one this morning. But anyway,
there you go. Just tell me all about
with that being said, it's like if you're the only one in the market, then is it that good of an idea? I don't know, right? Depends.
I think competition for me is two pieces are it's rare that something isn't being done.
Yeah.
And the classic competition is Excel.
Yeah.
Right. Like Excel is almost always a competitor in any sort of like process oriented flow.
Yep.
Or like the Notes app is the other classic competitor. And so there's always some degree of that competition. But the fact that other people are seeing the same problem is almost always a positive sign.
Always.
And we want to be able to see that. It really helps. The same thing as like being able to show the piece of, look, here are some of the other companies at a similar-ish stage or like a stage or two further along.
Yeah.
Here's how much they've raised. Here's who they've raised from. Those things are also really helpful for us as an investor because then when we go to investment committee, we can say, oh, look, as a comparable, there's this company here. There's this company here. And oftentimes, if you look at, for example, Xero no doubt would be going, oh, look, here's what MYOB looked like.
Yes.
And things like that. Like, you want to be able to show those things of like, look, this market does exist. People do buy.
Yeah.
They do this.
Sometimes it's almost like these big companies, these companies that come before, they're trying to solve the same problem, almost like lay the groundwork and foundation for you to almost build up and improve on, right?
Yeah.
And that's the nature of the market.
Or even the piece of like, you can also showcase competitors that are now dead and say why they didn't work.
Yeah.
And that also is a good, good insight. Like, I think there's one of the interesting questions in the sort of the AI sphere, I guess, is like, there's now a lot of opportunities where stuff that 10 years ago couldn't work now can. And you go, okay, well, like 10 years ago, there were these 5 companies that tried to do this and they all failed. And they all failed because of this. And AI solves this. And you're like, oh, okay, cool. Sweet. I can look at the journey of those companies. I can look at how they, so I think that's a good question. But yeah, I think you've got to have some degree of innovation. But like, I think no competition is always a bad sign.
Yeah, that's so true. We're out of questions, but I've got one last question. So in regards to Complete Coach, how do you see the angle and what's your opinion on this idea of embedding social media into the platform so you can manage those type of platforms from the software itself? Because I know you've got some particular experience with this one.
I have much experience.
Yes.
Look, I think...
Because it's such a natural play to think, right? Because it's just like we
do the marketing as well as we do all of the other bits.
Online coaches, a lot of them now. Instagram, you blow up, you do content. Everyone wants you to coach them because you look good and you have a brand and all this stuff, right? Naturally, it's
you chose your coach.
Yeah. No. He actually cold DM'd me on LinkedIn.
Oh, there you go.
On LinkedIn.
Even better.
The funniest thing, but yeah. Like, what's your overall comment on that? Yeah.
Look, I think the question. I think is really the piece for me is how much are you able to truly influence the person's marketing? And like, there's one part of saying you can slowly for this kind of market of where you go, you take a market segment and you say, we're going to take all the SaaS tools that they buy and we're just going to go gobble. Like we do the email solution, we do the social media posting solution, we do the CRM solution, we do the payment solution, we do the invoicing solution. you can do that, and like that's a valid strategy, and you're not kind of building HubSpot, right?
Sure. Yeah.
And like you look at Klaviyo, for example, they're
Coach
kind of going the
CRM.
same way.
Yeah.
MailChimp went down the CRM path and then got bought by Intuit. So now they're finance and mail and CRM, you know, like I think there's this piece of where it's a very clear and obvious thing to just slowly gobble your way through the different SaaS products that the customer buys. The challenge with that, though, is you can lose a lot of the focus on what makes your product unique.
Yeah.
And you can then sort of end up building a product that's kind of average across a lot of product areas. And sometimes being able to like sometimes being able to put those things together is helpful. Other times, the integration layer, I think now is quite easy. You know, like integrations are now much easier than they used to be because you can just point AI at the documentation and you can say, make this connect to this.
Everyone has an MCP now.
Correct.
Everyone
or if not, computer use, you know.
We have a sneaky last question.
Do
VC general partners, i.e. Hugh, invest directly in companies in the fund, or do you purely invest on behalf of LPs?
So it's common in VC funds to have what's called a GP commit. So generally speaking, somewhere between, let's say 1 and 10%, it's a pretty broad range, of the fund will be GP money. So definitely your investors will expect you to have some of your own capital at risk.
Sure.
Again, much like with a founder, that is situation dependent. You know, I think your Mike Cannon-Brookes equivalent person will have a different expectation as to how much money he would have in a hypothetical fund that he started.
Sure.
Compared to someone else. So definitely we have money in the fund, and I have money in the fund, substantial amount of money in the fund. So definitely we invest in the fund, I guess, alongside the fund in that sense. And there's incentives for as a manager for you to do that. Like for example, we don't pay fees to ourselves.
Right.
You know, like there's things like that, which kind of makes sense, I guess.
Does the percentage of how much money you have in the fund affect your ability to sway and influence the decisions of?
Well, that's a good question. It's a good question. Look, I think probably. I don't know. I mean, like I'm a minority. I'm a small investor in the fund.
Sure.
I'm definitely not the smallest check, but I'm not the biggest check at all.
Okay.
We have institutional money, so
by
nature we can't be. Well, I wish I could be the biggest check.
Sure.
But it does. I mean, like it certainly does a little bit sometimes where you think to yourself, like, and look, I think it helps you think to yourself, I want to be a good custodian of this capital.
Right.
Yeah. And I think it makes, certainly for me personally, it makes me feel a bit less mercenary. But the model varies a lot. The model does vary quite a lot, and different funds will have different things. And obviously, as your fund sort of grows up over time, for example, you may have scenarios where in later funds you have committed returns you've produced from earlier funds. You might, if you suddenly, if your fund is 10 times the size, you might not be able to still put in 10% each time. Like you've got liquidity problems and things for GPs as well. And so, so typically speaking, fund managers typically don't invest outside of the fund. There's usually sort of non-compete essentially type clauses within your fund that, the investors don't want you to pick really good investments and just put your own money into them. And so generally speaking, you'll be sort of have a non-compete essentially to say that you want most of it to do that. But exceptions do happen. And if it's outside the fund's mandate, then for example, there's nothing that usually stops, there's something that stops you from, as a GP, from committing, putting money into an exchange, like an ASX 100 ETF or something. It's not quite as strong as say, if you look at people who work for like Macquarie in a hedge fund or something, they'll typically not be able to invest in almost anything outside of the fund. Or, not within that asset class. So, I know a few people who, run equities funds from Macquarie, for example, and like they can invest in property because it's not an equity, not a public market equity, but they couldn't invest in like Telstra shares.
Okay.
And so they've got to put all their money into the fund. So they become really hard. Again, that's about that alignment piece. So VC is not quite as strong as that in terms of the sort of the clause.
Sure.
But you do have a bit of that dynamic. And certainly like if I was putting all of my personal money into all these random side startup things, my LP, my other investors might say, hey, like why aren't they in the fund? And that's a totally fair thing too.
Fair. Yeah.
And so I need to be able to justify that too.
Okay. Well, thank you very much for tuning in today, guys. Another great session. Thank you very much, Hugh, again.
Pleasure. Thank you for having me.
We do have our YouTube channel is in the chat. So if you want to take a look at our channel and subscribe, we do upload all of our content to there. We got some great talks coming up from our founder day that were edited and recorded with great audio. So please be kind to those. Also, there is a link Sorry, it's not hyperlink, but you can apply for funding from Galileo Ventures.
Yep. Cold
here.
intro's welcome.
Yep.
Fill in my CRM for me.
Yes. Please fill in his intro, his CRM for him. He will appreciate it.
Got a whole migration to do.
Also, lastly, we do have a Luma event on next week. We have a great story about how the startup Cremorne was acquired by Salesforce last year. So it's a great story of how Marcelo, the founder, moved from Italy to Melbourne to start a company here, and then they ended up being acquired by Salesforce down the line. I'm moderating that one, my first time moderating that one. So please feel free to come around to that as well, okay? Thank you very much, everyone. See you next time.
Thanks, everyone.